Morning Fractal Effects team. We're still following the market from the morning session, so if you're joining us right now, make sure you read the disclosure in the footer section of fractaleffects.com. If you're following along, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So obviously today is PPI, and still the strategy gave us exactly what we were looking for. The market translator translated everything we needed to know. We had a double break to the upside and then a break to the downside with the PPI news at 8:30 Eastern Standard. That created a triangle model, first presented fair value gap. We took that all the way to the blue zone for a 1 to 3. So we're technically already in the green. Right back to the DSD high. We have not broken the range for the New York session, so that was just the London session. Now, we only wrote it to the blue, but in order for London to meet its full obligation, I expect London highs to be taken, even if it's just a wick. And doing so will most likely break the the New York manipulation range and possibly set up short because we have a double break to the downside. Usually when you see a double break in both directions, you don't want to trade that market. Also on top of that, we have PPI today, right? So a lot of conditions there. We're just going to walk you through how to read the market. I actually would not recommend trading US 500 now that we do have double breaks in both directions. But today is Thursday. Thursday usually likes to retrace back to the weekly range. That's just the footprint of Thursday. Where's the weekly range? It's all the way down here in the aqua line that's marked up by the spotlight indicator. So that's the top of the weekly range. And I believe the bottom is right here on this green line, under this green line. So I have a lot of levels marked here. So that lets me know that the market most likely could push down. There's a 65% chance that the market could push down. And this double break right here somewhat confirms it. I don't know if US 500 will sweep those highs. It could just stop right here. But NAS wants to sweep these highs to deliver to this double break to meet the obligation of London session. So even though we know where it's going, doesn't mean we're going to get greedy and take all of it. As mentioned before, we got in here. We took a 1 to 3 all the way back to the blue zone. We're done for the day. We're still setting up for the New York session, but I do expect that NAS to take London highs and hit the consequence encroachment midpoint of that 4-hour fair value gap, and then most likely set up for a 5M bearish fair value gap short to take out these lows and most likely head down to the other side, the low of the weekly range. That's our prediction. That's the market translator translating that information to us. US 500, again, I don't know if it will take these highs. I suspect that it could just stay right here and then drop after NAS has taken those highs and given us that manipulation move to the downside. But this is what I mean by not getting greedy. When we saw that double break, I knew that it wanted to take these highs. But I'm only in it for 1 to 3. Technically, it was 3.02. So aim for the low-hanging fruit. 3%, you know. If you're not happy with that, I don't know what to tell you. If I made it all the way to the top here, it would have been 3.91%. But again, it's not about being greedy. This is a career. You got to look at it like that. Every time you take a loss, that's a business expense. But you got to make sure that you're aiming for the low-hanging fruit. Don't get greedy. There's not a single job on this planet where greed will help you. could even get you fired if you're looking for too much money. So anyways, that's the prediction for now. The range has not been broken for New York. Again, PPI. These are days where we actually tell you to take the day off, relax, do something else. But we're here live and we're walking you through this. And if you're an expert and you're comfortable with certain risks, you can take moves like this, like we did. This was just a perfect golden opportunity. You know, we had that big drop. We knew we were going to fill in at least 50% of that inefficiency from the PPI news at 8:30. So we're most likely, let's see if we get a bullish confirmation. Remember, if we get a bullish confirmation, we can't even sell this market. So then US 500 is the only one that would even look interesting. And that's how our rules save us. When you're using two of the most back-tested, most advanced strategies, then you have to listen to both of them. And if they're conflicting with each other, one's telling you it's going to go up, the other one's telling you it's going to go down, then you can't trade that market, even if you have a strong bias in one direction over the other. This is what saves you. You want both of these advanced strategies to be heading in the same direction. Why wouldn't you? Wouldn't that make for the easiest trading conditions? So we're getting close for a bullish confirmation here. They're both setting up for a bullish confirmation. There's your break. So finally, NAS took out London highs, which we knew it was going to. It's met all of London obligations now. But just because we have a break doesn't mean that the market wants to go in this direction. This is the manipulation move. Unless we get a double break, then we're going to wait for a setup for a sell on US 500. Now, if US 500 also gives us a bullish confirmation, sadly, we cannot trade this. Even though I have a strong bias with the blue zone strategy and the market translator, I got to listen to the rules that I set. We got to follow the rules that we created for capital preservation, which is our primary goal. Remember, day trading isn't everyday trading. It's only when things look easy. Right now they do, but if I get a bullish confirmation in the next minute and 46 seconds, suddenly things don't look so easy. Suddenly the water gets very muddy. So we might switch over to oil if we get that bullish confirmation, because I want this market to drop off and sell off. But that bullish confirmation is not going to allow that. Once you become this familiar with reading, by the way, this was read so fast that from the point that I turned on the charts to the point that I entered this trade was, I believe, 10 minutes. 10 minutes, and then boom. We got in on this candle here on a 1 minute time frame. Remember, hit a fair value gap, create a fair value gap, tap it, close over, and then we took that all the way to the blue zone. Super quick. Done. But that's not a New York session trade. That's a London. That's a trailing London trade, because I knew that London obligation had not been met yet. Five seconds left. We'll most likely get this bullish confirmation. We get that bullish confirmation. There you go. That means now I cannot sell this market. I cannot sell this market, and I cannot sell this market. What does that mean? That means I have to wait for a double break to the upside. A double break to the upside or a break down here. If we get a drop and a break here, then the market could pull back up. But then that would be a false day because we broke both sides of the range. There's your NYC fair value gap. Let me see if US 500 ever hit it. US 500 did hit it right there. So NAS left the NYC fair value gap open. Could come back and tap it here. If we had not got this bullish confirmation and we had set up for a bearish 5M fair value gap, I actually would have felt comfortable taking that all the way to the NYC fair value gap. But now that we have this bullish confirmation and we have a bullish confirmation on US 500 as well, I cannot, by my own rules, sell this market. And at the same time, I don't feel comfortable buying this market until I see more confluence. I want to see a double break to the upside, and then I want to see a retracement, most likely into the NYC fair value gap, a rejection, and then an entry. So we're just beginning our session. This is where the hard work begins. This is where the patience begins. This is where the avoidance of FOMO begins. You have to stick to just the rules. Read the market translator. It's translating something for you. Read it, understand it, wait for it. I've said this to people a million times. Know which industry you work in. Anybody who trades stocks and or plays the market and day trades, and if they tell you that they work in the world of finance, they're lying. Or they're confused and they don't understand what industry they're in. You're in psychology. That's this industry. That's what I work in. I work in psychology and reverse psychology. That's it. That's what this is. That's what the markets are. Markets have nothing to do with numbers. If you think a stock's value is based off of a stock price, you're completely mistaken. If you think that's the actual price of gold, one of the most precious metals on the planet, the most precious metal on the planet, you think that's the actual price of gold? You're confused. You have no idea what's happening. That's not how the markets work. You're in psychology. That's the industry you work in. The second you learn that, you will thrive. This is a game of patience. This is a game of avoiding FOMO, controlling your emotions, understanding that they're trying to fool you, manipulate you, and you have to control all your emotions, and you got to wade through those waters. And that's what the market translator does for you. Follow it to the T, and you'll be fine. It prevents you from getting manipulated and trapped. So what do we have? We have a bullish confirmation. We have a break. US 500 has not even broken its manipulation range yet. Remember, it's called a manipulation range for a reason. The break is the manipulation. It does not want to go in that direction unless we see a double break, just like we did in London. So while we're still waiting for this to set up, I'm going to go over London's trade. It was a no-brainer. I don't care if it's PPI. When you're a beginner, yes, make sure you know and avoid these days. But when you become an expert, you don't care if it's CPI, PPI, it doesn't matter. We saw a triangle pattern. There was a break, a double break, and then a breakdown here. That's a triangle pattern. What's the market translator trying to tell us? That the market wants to sweep London highs. How's it going to do it? The first presented fair value gap comes back, taps it on a smaller time frame. On a 1 minute, we looked for the same pattern. Remember, hit a fair value gap, create a fair value gap. So on the smaller time frame, we created another fair value gap, tapped it, and we took that all the way for a 1 to 3. Right back to the blue zone. Simple. even though I knew it was going to take out London highs. Still, to the blue zone for my 1 to 3, I rolled my stops after I hit 2R. For somebody who knows how to read this, it couldn't have been more easy. Each of these sessions is feeding off of each other. We had a double break in Asia. What happened? Retracement took out the highs, or sorry, the lows. But as soon as you get a double break, retracement, and then it's going to take out the double break. Now we're just waiting. I'm waiting for a double break to the upside, which I'm not sure will happen, to be completely honest with you, because like I said, I actually wanted the market to drop. But when it conflicts with your rules, you just avoid it. Capital preservation, primary goal. But that's where we're at right now. We have bullish confirmation, and we have a break to the upside. So a break to the upside, that's a manipulation move, meaning the market wants to push down unless we get a double break, which means the market does want to push up. Bullish confirmation usually leads to a retracement back into our dealing range 85% of the time. Remember, these two are the oldest tested, back-tested strategies. One's been back-tested 20 years, the other one's been back-tested 15 years. And still they're showing an 85% accuracy rate. So if you have an 85% accurate strategy, none of this bullshit that people try to teach you with harmonics patterns and support and resistance. And I've said it before, ICT, everything, all the concepts they teach, the higher time frame PD arrays, those are great. But does ICT really know what's happening? No. He's not a mathematician. The strategy was put together by 3 quantitative analysts and a chaotician who understands the algorithm that controls the market. That's why when it tells you that you cannot sell this market, you gotta listen. Excuse me. So again, what we're really waiting for now is a pullback, and I'd like to see a double break. That way, both of these strategies are back in alignment. They're both saying that the market wants to push up. Then we'll wait for a retracement, an entry. You gotta wait for the whole shebang. Just because you know what direction it's going, you can back this up for anybody joining us right now, right here. I believe we were right here when I said that we were going to take out London highs. There are some fools that would have jumped in right here to ride the market just to the highs. And they would have jacked up their lot size or their handles if you're trading futures. Remember, this strategy works across all assets, all time frames. But there are people that would have jacked up their lot size just to take that high. Why? That's not a 1 to 3. Stick to the rules. They'll save you. So again, just reiterating, what we're waiting for is a double break. I want to see a double break to the upside, and US 500 is yet to break its range altogether. And right now, it's giving us more confluence to the downside, even though the spotlight strategy is saying bullish. So those two strategies are conflicting on US 500. I can't trade that right now. It's not telling me enough information. Ideally, as mentioned before, I would have liked to seen or not have a spotlight confirmation and then US 500 sell off. Give us a 5M bearish fair value gap. That would have been your retracement back to the blue zone and a drop. But that confirmation, that was the monkey wrench that got thrown into our plans. Today's Thursday, guys. Watch the videos back. We've been accurate Monday. Sorry, we weren't live Monday, but we were accurate Monday. I'm trying to remember if we posted anything on the social media as far as what we took. But anyways, we were accurate Monday. Tuesday, which was CPI. We were accurate on that day, calling it in two different directions. We were accurate yesterday, and even though yesterday the market stalled and took a while because there was no high impact news driver, and today, 4 days, 4 days we've been accurate. This market translator does not care if it's CPI, PPI. You should. Again, if you're a brand new trader, you should not be trading on CPI and PPI days. But when you know what's happening and the market translator is telling you something, and you understand, then you can feel comfortable with that risk. But so far we have the one successful trade under our belt. Well, for 1 to 3, right back to the blue zone. And now I'm still setting up, still waiting for the market to give me a double break and a retracement. So as soon as you get this bullish confirmation, remember, this is one of the most back-tested strategies. So over the last 20 years, 85% of the time after we get that bullish confirmation, the market retraces back into our dealing range. 85% of the time. Now, if I get a double break, there's another 75% chance that the market's going to retrace further back into one of our blue zones or back to our DSD high. But this is where you want to find a trade setup. If I can get it down here, then I could take it right into this 15-minute fair value gap or all-time highs. But if it just keeps running without us and it doesn't give us that entry, there's nothing else we can do about it. We just got a break from US 500. So now I want to see a double break. This pattern right here, this DB, but in green. This thing reads, does all the calculations for you. All you got to do is understand how to read it. When you see a B, that's a manipulation move. When you see a DB, that's the direction the market wants to go. That's why we felt comfortable taking this London trade. We had a DB and then a B. So what's that let us know? That means that the market wants to push in this direction, and it just gave us a fake move to the downside. So fake move to the downside, and it wants to push up. I felt so comfortable taking this trade from here all the way up. And then it met London obligation. Remember, all three of these sessions work off of each other. You want to look back to see, has the previous session's obligation been met? If not, it's going to be met during this session. There's your double break in Asia. It got met before London even started. There's your triangle pattern. It got met right at New York. Well, not right at New York Open, but New York Open pushed, and it just finally broke and finally met London's obligations. It doesn't owe London anything anymore. That's what I mean by obligation. If it hasn't been met during the session, it will be met during the next session. So now New York is giving us all bullish confirmation. I want to see a retracement. We can get rid of this. This trade's been done now. Anybody who followed us, anybody who took that understands exactly what we did there. Congratulations. Yeah, so now that we have this bullish confirmation, I'm waiting for a retracement back into our dealing range. We already had an early retracement. That's where the EMAs crossed over. We're green across the board right here. This lets you know what the markets are doing on a higher time frame, so you don't have to keep flipping back and forth between the 4-hour, the 1-hour, the 30. We're green across the board. We've had the crossover. I'd like to see the market come back down and tap this fair value gap that's been left. That's inside of our dealing range. And then I want to see what it does there. US 30 is also confirmed. I just want to take a look at US 30 real quick to see if we have Full confluence across all three markets, yeah. So we have bullish confirmation across all three markets. We cannot sell any of this. All we can do is look for a buy. That's the other thing too. It makes you feel comfortable. When you're looking at the markets, there's only two things you can do. You either got to buy or sell. But what if one of those decisions was taken off the table? Now you only have to buy, but you have to look for a perfect entry. And where's that entry going to be? It's going to be here. And what I'd love to see is a double break to the upside. If I can get a double break to the upside, then that is all the confluence I'm looking for. That means everything, both strategies, all higher time frames, all other sessions prior are telling me that this market wants to push up. That's what I'm looking for. I'm looking for a DB to the upside and a retracement. So you just got to remain patient. Psychology. Remember, that's the real industry you're in. Anytime somebody asks you, what do you do for a living? I'm in psychology. You're not a psychologist, but you're in psychology. That's the field. That's the industry you're in. You're not in finance. You're not in trading. Those aren't things that you're in. It has nothing to do with it. Do you work with numbers? Do you wake up every day and translate certain information for people? No. You have to control your emotions and not be manipulated by the market. You're in psychology. Know what industry you're in. Looks like we're getting that pullback. I'd like to see it pull back into this 5M fair value. A lot of confluence over here. There's a lot of confluence, but honestly, what I'd love to see is a double break. Because a break just means that the market could manipulate and push down. But the second we get a double break, that's the dealer revealing their hand. London's a great example. DB, it meant that the market was going to push up. You just had to look for the right entry. And it was going to push up after it retraced. Take a look at Asia. Double break. It meant that the market was going to retrace, but it wanted to push down. And it did right here in between Asia and London session. This thing is so quick at reading the market that I literally save 30 minutes of extra sleep. I sleep in now. Instead of marking up the charts, I just turn it on. That's it. I just quickly look at it and go, oh, okay, great. Double break in this direction, manipulation move. The next version is going to be even better. But this is not a time lagging indicator. None of that bullshit. This is a market translator. 3 quantitative analysts, a chaotician, sat down to create this. It is reading and translating the algorithm that controls the market. So again, waiting for that pullback. Looks like it's happening now. Remember, all I can wait for is a double break. I cannot sell this market now because of the spotlight confirmation. I'd switch over to oil, but I think oil's just as sloppy today. We can take a quick look since we still have time here on the left-hand side. US oil, I took a peek earlier. It has just the same amount of range. It's got like a big range. So we had 2 dBs, both directions. We still haven't even broken the range yet. We hit the DSD high. Obviously, we were going to get that rejection. But it's met all of London's obligations. So when you had this dB, it meant that the market wanted to take out the low, and it did. And then we had a dB to the upside, retracement back to the blue zone, 5M fair value gap, which it tapped here. Or rather, sorry, it created another one, tapped here. and it's already hit the DSD high. So it's met London's obligation, but it has not broken the New York range, so it's still sloppy. If you're trading the New York range and you only want to trade the New York range, you have to wait for this range to be broken. If it's not broken, you can't trade it. Right now, this is the most, even though this is sloppy, this is still the better bet. NAS right now. NAS is a little bit more consistent than US 500. Definitely the stronger pair. So if we're buying, you're going to buy the stronger pair. What I'd ideally like to do is I want to see US 500 give me a double break first. Why? Because you want to see the weaker pair get stronger right before they both push, if you're bullish, and vice versa if you're bearish. You want to see the stronger pair get weaker right before they both drop. So this is the retracement we were looking for. You could retrace all the way to the DSD or even the blue zone back to the 20 EMA. So the market is drawn to the 20. And that's what this represents up here, by the way, the crossover. When you have that crossover, when the 20 goes above the 50, we get green. When the 20 goes below the 50, you get red. So on the 15-minute, for example, we just went red. When you're trading, you want to make sure the 1, the 5, and the 15, at the very least on the lower time frames, are heading in the same direction as the trade. That's very important. Here comes the retracement. And this is the retracement we were going to get regardless because we have a break. When you have a break, we either look for a retracement back to our blue zone or we look for a double break. So the first 5M bearish fair value gap would have been the ride down. If it doesn't give us a proper 5M bearish fair value gap, that's another signal that it wants to push up. You got to use both these strategies. There's two strategies right now that we're utilizing, and both are back tested over 20 years with over 80% accuracy. That means if you stick to the 1 to 3 risk to reward ratio, you'll always be profitable. Join us in one of our webinars. We walk you through all testimonials. We'll show you how we placed in the LEAP contest. 52% returns in 30 days using the Fractal Effects strategy. You can check that out on tradingview.com. It was, I think it was 2 contests ago. We should probably start doing that contest I think they have it every 3 months, 6 months, I don't know. It's hard to keep up, but it's on the TradingView website. You can scroll down. I think it was 2 contests ago. I think we're going to post it on our homepage so people can actually find it a little quicker. But don't take our word for it. You know, join our webinar, check our testimonials, and see how we did on the LEAP contest. 52% over 30 days. We placed in the 3%. Obviously, there's people over trading, over leveraging to win that contest. Our goal wasn't to win. Our goal was to place and show you guys definitively what our strategies are capable of. We were part of the top 3% of 40, can't even remember. I think it was 40,000 participants, 46,000 participants. We placed in the top 3%, 52% gains in 30 days. So here's our retracement. I still want to see a double break to the upside. Because until I get a double break, I have 2 conflicting strategies. Right now, this B means that I cannot buy this market. And this green triangle confirmation means that I cannot sell this market. So I need a dB, like this one. I need a dB, and when we get that dB, don't worry, the market's not going to continue to just take off. Then we'll wait for another retracement and the first presented fair value gap. We still got time. We're live for another 30 minutes. Remember, if you're not in a high probability trade setup within 30 minutes, or sorry, 1 hour after the range formation, you're done for the day. We're not sitting here watching this. We're not here watching paint dry. We're high probability traders looking for a high probability trade setup. So there's your first 5M bearish fair value gap that's being created right now. We could retrace as deep as the NYC fair value gap because that's wide open on NAS. We don't have to, but we could. It's a little messy right now with a lot of these things. Let me just see where things are. Okay. So we have this big giant blue zone that was created because of the PPI news. So the market could come all the way back down here. Now, sadly, I can't sell this market, but if we didn't have a bullish confirmation, I would have looked for a trade setup to go short from here all the way down here. Why? Because without that bullish confirmation, we're only relying solely on the blue zone strategy. And the blue zone strategy says once we get a break, we get a 5M fair value gap. And if we tap it and we get a 1M bearish fair value gap, we can take that all the way back down to our next PD array, which is right here, the NYC opening gap, which was left untouched. But sadly, we did get this bullish confirmation. That means I have to wait for that retracement to finish and then look for a buy setup. So two conflicting strategies. So it's even more lucky that we got this trade, this early trade setup, and we rode this out. So we don't have to be a part of this messiness. London, it's a hard session to trade depending on where you're located, what time zone you're in, what country you're in. But if you can, this is actually the more cleaner session. Because with the London session, there's little to no news drop. Sure, on PPI day and CPI day, because that hits at 8:30 a.m. But outside of that, it does give you clean trade setups. One minute, 14 seconds left for this candle to close, and I want to see if this bearish fair value gap does stay open. Even US 500 did not tap its fair value gap. Yeah, if that bullish confirmation wasn't there, I'd look for a trade setup to go short right into this. But this is what you got to do, right? You got to stick to your rules. The rules are there for a reason, to save you, for capital preservation. They're not just there so you can abide by them some days. Trust me, there have been days where I have this gut feeling, and I know that the market translator is telling me it's going to drop, but I get a spotlight confirmation in the opposite direction, and I go, okay, I can't do it. Let's walk away. I come back later and it dropped. But do I feel bad about it? No. I put these rules in place to save me, to preserve my capital. So I got to follow them to the T. Another reason why you're in psychology. That's the industry you're in. You're in psychology. Sadly, the only patient is you, but that's the field you're in. You're not a day trader. You're not a finance guy. You're in psychology with one patient, where you're the psychologist and the patient at the same time. Once you start looking at the market from that perspective, everything changes. I promise you, everything will change for you. Today's the only day where the waters have gotten this muddy. Monday, Tuesday, Wednesday, we had successful trades 3 days in a row. 3 days in a row, we were live for two of those. Monday, we took a trade setup as well. But the market translator was accurate. He'll be accurate today too. It's just not telling us what we want to see, but it doesn't mean it's not going to be accurate. So I just want to see if we have another. Sometimes when you have too many of these levels, it just becomes a little hard to see. Let's see if there's another blue zone in here. I promise you, even though we have a lot of colors, a lot of things set up right here, once you learn this, it's like the Matrix. You won't even see this anymore. You'll just see buy or sell. You won't see all these colors or these patterns. You'll recognize it immediately, and it's just a buy or sell for you. And I promise you, you'll get used to this in about 20, 30 days. If you're trading every single day in a month, this is just second nature to you. As mentioned before, I was in this trade setup 10 minutes after turning on my computer. 10 minutes I was in this trade setup just by quickly scanning and seeing what's happening in the market. So we're back at the 20 EMA. Now I cannot buy this market until I get a double break. So all of this retracement back because of the spotlight strategy is great. But until I get a double break, if this market wants to continue to drop possibly further, it could drop all the way back down to the NYC fair value gap. That's why if I didn't have that bullish confirmation, I would have actually looked to see if I can take a trade setup in this fair value gap all the way back down here, but I can't. I cannot sell this market now because of this confirmation. And that's fine too. Like I said, we've had 3 successful trades this week, all at 3%, 1 to 3 risk to reward. We're up 9%. That's why I'll just sit back and watch this. Until it gives me everything that I want to see, I don't have to trade this market. I'm not going to trade this market. Excuse me. Got 20 minutes left in our stream. Let's see if we get the setup. Just got to remain patient. So there goes the market continuing to drop. Also keep in mind we did tap this 15-minute fair value gap as well. There's another reason that it pushed this market down. So US 500, that's the NYC, or sorry, the NYC fair value gap. If you guys have any questions, drop it in the comments section. We'll get to them. Anything associated with the market translator or strategy, or just any question about trading in general for your beginner, an expert, if there's a concept that you're not fully grasping. Because there's a lot of misinformation, a lot of bad academies that teach you really bad strategies. I'm going to tell you this right now. At any point, if somebody says these three words, if anybody says harmonics patterns, if anybody says buying and selling pressure or support and resistance, if you hear those kinds of words, do not join that academy. These people have no idea what's happening in the market. They're selling misinformation, the same misinformation that was taught to them. That is not what's happening in the market. The only person that was close was ICT, and even he doesn't fully grasp everything that's happening in the market here. He's not a mathematician. He was just he's a really good trader. If I'm not mistaken, I believe he completely crashed out on the Robbins Cup. We have not taken the Robbins Cup yet. That is something we're interested in. We'd like to join and see how we place, how the Fractal Effects strategies place. The only thing I don't like about majority of these contests, and even the Leap contest that we placed in the top 3%, is people over leverage. That's not how a real trader trades. They're just trying to win. So they over leverage and they get these numbers that are not consistent with their actual strategies and their teachings, right? We could do that. We could easily over leverage and place in the top 1%, if not try to win that. But that's not a real good reflection. What if we made 80% in a month? And we actually have students that have made something. We have a student that, and if you're going to do this, don't brag to me about it, because I'm not going to be proud of you. But we have students that over leverage and have made somewhere in the ballpark of, I believe it was 73% in a month. And that is not consistent trading. You're over leveraging, you're not sticking to the rules. What if the market turned around on you? Remember, nothing is 100% in the market. You don't know what's going to happen. One wrong move and you could blow out your account. 73%. You can imagine how over leveraged that person was to get that kind of percentage. So that's the only thing about these contests. But we love testing our strategies in these contests just to show you guys what the returns would look like to the average person. That way, it's not, you don't have to take our word for it. You can see it. Just like the Leap contest with TradingView. Maybe we should enter more of those. We're just trying to find more time to actually do that. It's harder for us to trade because that's an isolated account. It's an isolated TradingView demo account. So we got to trade that, and then we have to trade our accounts. Sometimes you don't have the time. You got to concentrate on the more important things. So we've retraced back to the blue zone now. So we could get a 5M bullish fair value gap. The market could technically push up from here. But because I have this break, I have to get a DB first before I can actually trade this market. Otherwise, the market could just continue to drop. Could come all the way back down to the NYC fair value gap as well. Not to mention we have a downside expansion model. And today is Thursday. Thursday likes to retrace back to the weekly range. So it's already tapped the top of the weekly range. The low is all the way down there because we had a big range on Monday. US 500 hasn't even tapped its weekly range. So all the way down there. Is that the opening of it? Oh no, that is right there. Sorry. So that's the top of it, and then what you just saw was the bottom of it. The spotlight indicator paints those out for you. So Thursday likes to retrace back down to the weekly range. And right now the blue zone strategy is giving us confluence to the downside, whereas the spotlight strategy is giving us confluence to the upside. That's why I need that double break. I need another green box to be created that says DB. That lets me know that this market wants to push up. And I don't know if we're going to get that in our window of opportunity. All that has to happen in the next 13 minutes. Could. Let's see. Patience. And guys, do your due diligence, regardless of if it's Fractal Effects or regardless of what academy you join. Do your due diligence. We're offering this for free right now. We're on YouTube for free, walking you through this so you can see what our strategy is doing. We're not selling you bull. We've seen too many students go through too many garbage academies that don't teach you anything. We have the fastest strategy to learn. And at the same time, it's the most back-tested and most accurate. 80% accuracy, over 80% accuracy. Back-tested over 20 years. And on top of that, you can learn this in 5 to 7 days. Practice for 30 days in a demo account. You're ready to go. And then trade with us. We'll hold your hand. We'll walk you through it. But I'm tired. I'm tired of students learning from garbage academies that teach you absolutely nothing. Did you know our biggest competitor, and they do a ridiculous amount of sales, quadrupling us. Does it mean they have a better product? No, they're just great at sales. I will have you know that this academy, which we will not mention here, but they have over 10,000 students. They have over, I believe it was 500 videos, over 20 indicators. So what are you guys really selling? What are you selling when you have over 500 videos and 20 indicators and 6, 7 master traders teaching you? It's no different than, and forgive me for this analogy, hopefully it doesn't offend anybody, but that's no different than religion. You guys are all trying to teach something different, but inevitably saying you all believe in the same one entity. There's only one entity that could have created everything, and you're saying you're trying to compartmentalize it and tell me that no, this is different, ours is different. That's what this academy, and that's what majority of these academies are teaching you, that there's 50 different ways to get it right. No. That means there's 50 different ways of getting it wrong too. We only teach you 2 strategies, and they both work together. That's it, 2 strategies. are content you can cover in 5 to 7 days. Probably a weekend, actually, if you're diligent. With a ridiculous amount of accuracy. We caught this trade on PPI, clean. We came in on one of the most volatile trading days, and we got in clean within 10 minutes of just reading this and took this right to the blue zone and even called it to the top and just didn't take it because, again, we're not getting greedy. It's about capital preservation, aiming for the low-hanging fruit. And now we just called it. I said I would have easily taken the trade from here down to the NYC fair value gap if I didn't get this bullish confirmation. So I'm just using my own rules to protect myself. Day trading isn't everyday trading. It's only when things look easy. And right now, these two strategies, two of the most back-tested, oldest strategies, are conflicting with each other. This one's saying buy, and this one's saying it's a sell for the time being. But when we get a DB up here, then they'll both be a buy. Got about 9 minutes left. I don't know if we're going to see that trade set up during this window of opportunity. That's the other thing too. If you're not in a high probability trade setup within 1 hour of the range formation, call it. Go home. Go to work. Go hit the gym. Do whatever it is that you do. We're not about sitting here watching paint dry. We remain patient. We wade through the water. We stalk the market. We don't chase it. But once our time is wrapped up, we're wrapped up. We're done. Don't believe us? Check the videos from this week. We weren't live Monday, but we had a successful trade on Monday, Tuesday, which was CPI. We manipulated this market on CPI like nobody's business. We called both directions and got it right. That's what the market translator is capable of. Yesterday, check out the video. We called it. Today, called it. Successful trade. Now the next one, I told you, it's most likely going to come down here, and then I would like to see a double break, or it could just push right through. But there's not enough confluence here to call it yet. What's the alternative? You're sitting there biting your nails, hoping the market turns back in your direction? No. We remain patient and wait for all the confluence points to show up. Again, watch the videos from this week. Nostradamus couldn't have called it better. But just because I know which direction the market wants to go doesn't mean that it meets all my rules all the time. It has to meet all my rules, all confluence points, and it has to give me the 1 to 3 risk to reward. If it doesn't give me all 3 of those, I don't take those trades. I've called it so many times. I've watched that market just head in the direction that I knew it was going to, but I couldn't take it because it didn't fit my rules. And I didn't feel bad about it after either. That's the beauty of rules. That's like taking the same path home from work every single day. But that one day that you deviate, you take a shortcut, or you see, oh, there's traffic, I'm going to go in this other direction, and you get into a car accident. And you're sitting there wondering, would I have been in a car accident if I just stuck to my natural path, my regular route? That's what consistent rules gives you. That's your regular route. Then if you lose, you can't feel bad about it. That's just a business expense at that point. That's how you got to look at losing, a business expense. It's the cost of doing business. But stick to your rules. Right now, New York is giving me nothing. And London gave us that one last push up, which we took. See, this is what happens when you have two conflicting strategies, two conflicting confirmations. It's now pushing back down here. And it took this, I believe there's a sliver of a fair value gap right here. Is there? Yeah. Teeny tiny sliver. It took that all the way down. And as mentioned before, I would have looked for an entry here to go short. It's just this confirmation told me no. So you want to trade with both of these strategies heading in the same direction. Think about that for a second. Two strategies that are both back tested over a decade, 2 decades in one particular case, with 80% accuracy on both of them. It only makes sense for both of them to tell you the same direction, don't you think? That's when the probabilities go through the roof. As mentioned before, don't take my word for it. Watch the video. Go back to our YouTube channel. Check yesterday. Check Tuesday. We weren't live Monday, but we took a successful trade on Monday. We're up 9%. There you go. Delivered. Right back to the NYC fair value gap. Now, why did that happen? I just told you it was going to from up here, most likely all the way down here. Think that's coincidence? No, that's just the market translating itself right now. This market translator translates the information, translates the algorithm. It's not a time lagging indicator. It's none of that bullshit strategy that other people teach you. This is translating the most sophisticated algorithm. The algorithm that controls the market is elegant because it's not just psychology, it's reverse psychology happening at the same time. And this is preventing it. This is letting you know where the manipulations are going to be, which direction the market actually wants to go. Right now, the blue zone strategy and the market translator were telling me that the market wants to push down. This DB right here let me know that the market also wants to push down. But again, this confirmation is the only thing that stopped me from taking a sell. And I have to be okay with that. I'm okay with that. I don't feel bad. Who feels bad when they're up 9% for the week? Remember, day trading is not everyday trading. Stay patient. Wait for the easy setups. This couldn't have been more sloppy for a beginner. PPI day. Those days you want to avoid when you're a beginner. CPI, PPI, FOMC, non-farm payroll, anytime Fed Chair Powell speaks, and now anytime Trump opens his mouth, because who knows what he's going to say. So you got to proceed with caution when you're a beginner. And although those news drops don't actually influence the market makers use those days as smoke screens to reprice the market in the direction they want. They were going to do it anyways, but they need a reason to, because like I said, this is all psychology. There's no such thing as a market crash. How could there be when even the price is speculative? A stock price is speculative, has nothing to do with the actual worth of a company. Look at the price of gold and tell me I'm wrong. Anyways, we're back at the NYC fair value gap. We only got 2 minutes left. So I'm going to leave you with some homework. Come back later in the day and check to see if one of two things happened. Did we get that double break, which looks like this right here? It'll be a green box with arrow pointing up. Did we get a double break retracement and then an extension? Or did the market drop all the way through and give us a break to the opposite side, fulfilling this London obligation on US 500 and heading down to the weekly range right there? So I'll leave you with that. I could not have sold this market because of this bullish confirmation. Otherwise, I wanted to. I wanted to sell it all the way from there, all the way down here. But our rules tell us no. And you got to stick to the rules and feel okay about it. But we'll conclude our session there. Please hit the subscribe button, turn on your notifications if you haven't done so already. So you know when we're live Tuesday, Wednesdays, and Thursdays. So we'll be back next week. I'm going to leave you guys with some weekly homework as well. make sure you back test the strategy over the last 3 days, or just watch the videos from Tuesday, Wednesday, and then rewatch today's video back to back and see how each one of those sessions works and builds off of each other. And you'll see the accuracy. Like I said, we called it. We called it Tuesday, we called it Wednesday, and we called it today with this trade. But we'll be back next week. Also, check us out on all social medias, fractal.effects. We're always uploading new educational material. And if you guys have any questions, drop it in the comments section. We'll get back around to it. Have a great rest of the week and a great weekend. Take care.